When we're looking at MSTR and the products they have, STRF and STRK, they're perpetual preferred stock offering, one convertible, one not. One pays a 10% dividend, one pays an 8% dividend. And the first question that many of you probably have when looking at these products is, how do those dividends get paid? Well, I'm here to answer that, and I'm here to use the slides from the latest earnings call of Strategy to show you how they plan to pay for it, and explain why they're paying for it in that way, and why it's beneficial when looking at a Bitcoin yield metric. My name is Forrest Hodel. I'm a Bitcoin educator and coach, and if you want to book me for a one-on-one for any Bitcoin needs, Bitcoin basics, Bitcoin security, anything like that, you can do so through the link in my description. A lot of us probably watching this understand the ATM or equity sale story of Strategy, but basically when they trade at a premium, the share price at a premium of their Bitcoin holdings, they can arbitrage the difference when they sell new shares into the market to the participants that are buying and selling within there, and they're getting cash for those sales, and they immediately buy Bitcoin. So if they're trading at a multiple to their net asset value of 2, that means for every $2 of new share sales, they can make $1 of Bitcoin yield. And that's because they take that cash immediately upon sale and put that into Bitcoin, and therefore they raise their net asset value by doing so. And there's the subtraction of the 1 from the 2 because that is added to dilution, but it's still accretive in Bitcoin yield. So the ATM is efficient in raising Bitcoin yield, but it's not the most efficient. Use of debt or use of these bond-like instruments like STRK and STRF actually are more accretive to the Bitcoin yield metric. However, they introduce debt, or they introduce a product that has a fixed payment on top of it that needs to be serviced. So that's the problem with them. Whereas an ATM increases the net asset value without adding debt and actually deleverages the amount of debt that they have. So they have these two instruments that can add leverage or deleverage. And the deleveraging happens when they issue equity. Now, I do think that there's sort of a max amount they can do that and all of that, but that's maybe for a different video. So let's take a look at this first slide here. This is the equity ATM uses. So cover fixed annual obligations and opportunistically purchase Bitcoin. So their idea with the ATM moving forward is continue doing what they were doing, which is opportunistically purchase Bitcoin by issuing new shares, selling them, and buying Bitcoin with the proceeds. But they also plan to use the ATM to cover fixed annual obligations. So this is how they plan to pay for STRK and STRF dividend payments. So if we look here, they've currently issued the converts, STRF, and STRK. So 8.2 billion of the converts, their annual obligation is 35 million. Their STRF, they've issued, it looks like 850, I believe, million. I thought it was less than this, but this isn't the total amount that they're able to issue into the future. I believe this is what they're currently issued. And at a 10% yield, that's 85 million. STRK 818 million, 8% yield 65 million. So their total notional value of everything here is 9.8 billion, and they have an annual obligation payment of 185 million. So this right now, as it stands and as it goes into the future, this will increase likely. But as of now, they have an obligation to pay 185 million per year. And you're thinking, okay, well, how do they do that? Their operating business, if we look back at one of their slides of their operating business, they don't make that much money through it. They're trying to be more efficient. They have seen some growth in that field, but this isn't the reason that people are invested in Strategy. This is the software highlights here. Total revenues is 111 million. And they are growing year over year. But again, that isn't how they're going to necessarily pay for these payments. Let's take a look at these other numbers here and discuss them. Bitcoin average daily traded volume last 30 days, 33 billion. MSTR average daily volume traded last 30 days, 5.8 billion. Annual fixed obligations, again, 185 million. ATM equity raises in the year to date of 2025, and we're only 5 months into the year, right? So they've been able to raise 6.6 billion, not by issuing debt, not by anything else, but hitting the ATM. They've raised a huge amount of cash, right? So you can see they've been able to raise 6.6 billion, and they have 185 million of obligations. So that seems to be no problem, in my opinion, to pay a very small fraction. And let's actually look at the fractions of that. So ChatGPT spat out this number for me. This all looks right. The math checks out. Their obligations to pay right here is 2.8% of the amount of money that they've raised 5 months into the year. So it is not very concerning, in my opinion, because they can easily raise that amount of money to pay for those obligations year over year over year over year, continuing into the future. So again, this reiterates just how small these annual fixed obligations are. Annual fixed obligations, the whole 185 million as a percent of daily traded volume, only accounts for 3.2% of the daily traded volume of MSTR any given day, right, on average. And what's interesting about this is they're able to issue equity into the market depending on the volume and the activity within the equity market for MSTR. And they really aren't able to, just issue a ton of ATM all at once, because that would basically crash. That would create all this artificial selling pressure from the company itself and crash the stock. Now, they do this very strategically. They issue when they can. They don't issue other times, and they're careful with how much they issue throughout the day. Now, that is selling pressure, right? That is going to affect things, but they're able to raise a ton of cash by doing so, as long as they have a premium to their net asset value. Annual fixed obligations as percent of last 12 months equity raised, 0.8%. Annual fixed obligations as percent of last 12 months traded volume, 0.02%. So again, this is really, at this point, not a big issue because they're able to raise so much money with the ATM, and these obligations are so little. So yes, they are paying for these dividends continuing into the future. These will increase, but there's no reason that it is possible for the ATM cash raised to increase as well if there continues to be more and more buyers and more demand for MSTR. As we've seen, the trend is increasing for this. Of course, there's dips and all of that. Now you can actually see here are some charts just a little bit more about Strike and Strife. You can see the price performance of the actual underlying shares, much higher on average, right? The amount of data they have compared to all of this might skew these charts a little bit because they're fairly new offerings as well. However, they have outperformed on average all the other preferreds, and the trading volume is just massive compared to all the other preferreds. And again, with Strife as well, slightly less numbers on Strife, slightly newer offering, and still extremely high compared to the other preferred stock offerings out there. So these will continue to garner interest. Now, here's the kind of the argument of why they plan to do Strike and Strife over a convertible bond. And they might still do convertible bonds if there's interest in them, but they seem to think that the Strike and Strife perpetual preferred stocks are a better option for them for these reasons. So permanent leverage without refinancing risk. So right here you can see they've acquired 100 million, or they've issued 100 million worth of Strike and Strife in this example, and they continue to pay out an 8 to 10 million fixed dividend per annum in perpetuity. So that creates permanent leverage on their balance sheet. So again, some of the information here: permanent capital with no maturity. These never mature, so they never have to refinance. And so therefore no refinancing risk. Now, depending on credit rating, depending on a bunch of different factors within the market, when Strategy would refinance, if it was something that came due and they had to refinance, they could get less favorable refinancing or something like that, right? So they're just saying that's not a risk at all. So no restrictive covenants covenants, this means the lender of the debt type instrument hasn't put in some sort of stipulations that make it very difficult, or there's some sort of stipulations within there that are unfavorable to strategy. Again, no collateral. This doesn't mean that there either needs to be shares up, common Class A shares up for the dilution event if they're convertible, or there needs to be some sort of repayment, mass repayment upon maturity of this debt, because again, this is just a perpetual preferred offering that pays out this dividend year over year. Publicly listed with greater access, ability to raise follow-up capital. So publicly listed, these are stocks that can be traded by anyone at this point, STRK and STRF. And that means there's the volume within those markets, which also means that because there's ATMs on STRK, and soon I imagine there'll be one on STRF, MSTR can issue more debt as they see fit, or more debt-like instruments through these preferred offerings. And it's not these big, large tranches of convertible debt here and there. It's really just at their call to issue these preferred stocks whenever they deem necessary, or whenever they see opportunity within the market to do so. Now, with a traditional bond with 5-year maturity, now this isn't a convertible bond, this is a traditional bond, but they issue 100 million, they have a fixed coupon, then the principal repayment happens, and they have to pay that back, and then they refinance at the same time. And it kind of goes on and continues on like that in this example. So there's fixed maturity, repayment, or refinancing risk. So they either have to repay it, or with a convertible one, this chart would look slightly different. Refinancing costs. So there's costs associated with the reissuing of these converts. There's banks that are involved, or sorry, not even the converts. A traditional bond is this example. There's fees that go to the other parties involved in this. With STRK and STRF, those fees have been paid. They're now able to do those ATMs just on their own because they've opened that up. There's restrictive covenants depending on what the lender decides. I mean, that's up to debate. I mean, they probably are pretty favorable for MSTR still, but who knows into the future, right? Who knows? Collateral requirements, so they either have to put some cash on the side to repay this at some point, or they have to dilute the common shareholders and raise cash at a certain point to refinance and repay this, or re-up the debt to pay back the old debt, and limited access. So again, there needs to be a market for that debt. They have to find that market. They have to be just careful with, they just have less access, again, limited access. They have less access to be able to issue this debt, and it comes with a lot more, in their eyes, stipulations. So this claims to have $12 million leakage over 30 years, assuming 2% refinancing costs. So they're saying that these refinancing, within the costs of that, there's going to be a 2% leakage, and then over 30 years, that ends up being $12 million on the $100 million example here. So they're essentially saying the STRK and STRF offering, because of these reasons, are better than a traditional bond. Now, I think the argument here would be that their convertible bonds are quite popular and quite interesting, and potentially better in some ways, and they're not really arguing the convertible bond here, just the traditional bond. I see the reasoning for this. I think that they're probably correct, and I also think that the convertible bonds are still in play, but that market is smaller. There are other entrants into there. Maybe they have a moat. We'll see. But this STRK and STRF seems to be a very liquid, very strong optionality within their ability to be able to issue it. And of course, we went over how they plan to pay for it. So hopefully this was interesting. Hopefully this was helpful for your understanding of the STRK and STRF perpetual preferred stock offering. I think an additional benefit of having something like this open to the public, open to investors, is there are a lot of people that put some preferred stock into their portfolio to gain some dividends, right? Some income orientated investors, and they'll see they'll look at this and they'll think, okay, what are the risks to me owning this? The payouts are really high on it, so they might assume, oh, MSTR is in some sort of trouble. And then they start looking into the finances of it and they say, wow, they have very little debt. They have a huge amount of assets. These assets are Bitcoin. Now I need to understand the risks of Bitcoin. And this could actually begin to orange pill a lot of income orientated investors, a lot of investors that for other reasons probably haven't been interested in Bitcoin. So in a lot of ways, I think that there's some knock-on effects, some dominoes that could fall from the continued interest and popularity of the STRK and STRF perpetual preferred stocks. Thanks everyone for watching. My name's Forrest Hodel. I'm a Bitcoin coach and educator. If you need some help with your Bitcoin security, best practices, any questions you might have, you can book me for a one-on-one. There's a link in the description. If you want to get yourself some Bitcoin, I would recommend Bitcoin Well. They're self-custodial exchange, which means that when you send them dollars, they send you Bitcoin directly. So there's no counterparty risk. And if you use my link in the description, you can get some free Bitcoin on sign up. I also recommend checking out Stampseed Kit. I have a code for 15% off. The code is BTC not crypto 15, and they have a titanium seed plate, which in my opinion is one of the best ways to preserve your seed phrase for future generations. And if you need a hardware wallet, I have a 5% discount code for the Bitbox. Again, link in the description for that as well. There are many hardware wallets out there that are great. This one is pretty good, and the one that I have a discount for. So check it out. Thanks everyone for watching, and we'll see you in the next video.